the performance of the Clark Pacific model portfolios for the last quarter has been exceptionally strong, and for the last year. So for the quarter, the portfolios were up between approximately 3 and 7%, and for the year, approximately 8 and 16% from a most conservative to most aggressive portfolio. This is really on the back of confidence returning to investment markets, as a huge amount of money has come from cash and term deposits and gold and other conservative investments back into equities looking for higher returns. Also, Europe continues to remain a little bit more stable than it has been in the past. This is on the back of the ECB's statement that they would do whatever it takes virtually to stabilise the banking system there. Very importantly, we're seeing the USA economy show signs of growth, really good signs of early, prolonged, steady growth. Some of this is coming through in lower resources costs and lower energy costs, which is indicating that they may become or enjoy some really good manufacturing growth going forward. Also, China is producing good growth rates, albeit slightly below market expectations. The real thing that we're very happy with our model portfolio returns is the way they're staying true to our ethos and investment hopes of being absolute return. And this is really shown in the Pengana Absolute Return Fund, in that for the last quarter it returned 10%. Now the market was up very strongly in that period. The market did come down in March by 2.2%, but that Pengana fund didn't come off at all. It was about zero or slightly positive, and this is really true to the absolute return mandate we're trying to invest in and investing in for our clients, where the preservation of capital is absolutely paramount. Well, we've made a decision at Clark Pacific, even though performance has been very strong over the last quarter and last year, that now is the right time to make some small adjustments in the portfolios to have them positioned for economic growth and performance going forward. It's very easy to get caught up in this environment and look to become very aggressive, but we think some small changes in the right area will hold our clients' portfolios in good stead. These really come about in a couple of themed areas, and the first one is moving what money we've had in term deposits for clients over the last 3 or 4 years, when we had very high rates of return underwritten by the government, somewhere near 7.5% per annum, as they're coming down now to near 4% per annum. There's increasing pressure to move those across to other asset classes or other investments that can get a little bit more return. So to this length, after a lot of research and review and interviewing of many fund managers, we've decided to move a small portion of that term deposit money to Capstream and Capstream's Absolute Return Bond Fund, which really aims to get 2% more than the cash rate, which is run by an extremely impressive management team with a really good track record of returns. We'll also be introducing the Schroders Real Return Fund, which has an investment methodology very close to our own thoughts and feelings, and a great team that's highly rated as well. The other key area where we've made some changes is really off the back of what we see a shift in the economic outlook and the investment market outlook, in that we think that China and the demand for Australian resources, as China went through this huge infrastructure spending spree that has really led towards Australia being able to dig up and sell its resources at almost any price. We think the pressure being placed on that area now, and the likelihood that China is going to dramatically cut back its infrastructure spending, is quite real, and because of that we're moving some assets in a small way away from the Premium China Fund and into further weighting to the Magellan International Fund, which we've already got an exposure to and has performed exceptionally well. We're also introducing the Platinum International Fund, which we're very impressed with, and it has a great investment philosophy and a very strong investment team to take advantage of that global growth that we see coming in the US and international spaces, and sort of trimming some of our exposure to that Chinese commodity demand that we think may not be as strong in the future. The investment committee at Clark Pacific meets once a quarter, and we apply a very rigorous process and system to ensuring that the changes we make to clients' portfolios are really well analysed and thought out. That starts with the committee reviewing economic data and asset consultant reports based on the outlook of the economic environment in Australia and globally across multiple asset classes. We then interview every single fund manager that we have client money with, and we also interview every fund manager that we're looking to introduce or perhaps thinking about introducing. And in these meetings, we're really focused on the quality of the investment team, their performance, the fees that they charge, and really importantly, the alignment of the investment manager's interests with that of our investors. So for instance, we really like to see it where they've got a lot of skin in the game, where that fund manager, their outcomes and their financial remuneration is strongly linked to a positive performance for our clients. So we really like very low fees, but we're not afraid to go with managers that do well when our clients do well. Once we've made that selection and done that review process, we have a couple of safety checks. And one of those safety checks is our research team at our licensee that then also review and make sure that they're on approved product lists. There's about 450 different products, and we ensure that the products that we're looking for and that we're wanting to use are either on that list or we lobby to have them on that list. We then also put those model portfolios into a piece of software that allows us to really look through and analyse the whole risk of that portfolio. Sometimes when you put different managers together, you can end up with undesired exposures to a single company. So for instance, we know with the model portfolios we're proposing to change to next month, we know for instance that ANZ is the largest exposure in the Australian market, and that represents 2.94%. And we know that each individual exposure on the international side is no greater than 1.46%. So we know that the risk is mitigated. After this process, and we're comfortable with that, we have one final check through the investment committee to understand that the model portfolios, and we look at some regression testing for those. And once we're comfortable with that, we form an opinion, we sign it off, and then of course we roll out and implement that advice. Well, as a result of these changes to model portfolios, clients of Clark Pacific's premium portfolio service will receive an email, and attached to that email will be an advice document with the recommendations we're making for that client, with the supporting material for that, as well as a switch document that they'll need to sign and send back in order for us to effect that switch to their model portfolio. If clients can review this documentation and complete it and send it back, that'd be greatly appreciated. Also, if they have any questions, it goes without saying that they should contact me or one of the team at Clark Pacific to work through those questions. So that brings our quarterly update to conclusion. Thank you very much to viewers for watching, and have a great day.